All right, let's get an instant audit, Ashley, from Fox Business contributor Charles Payne and James Frischling from NewOak, both with us here. A lot of turkeys need to be let go here, Charles, or what? What do you think?
Well, there's no doubt about that. I don't know who could argue with that. How many let go? Certainly, I think it's more than 20. You know, let's be honest. I mean, it was a cultural problem, and it's not just that 1 or 2 or 20 people make mistakes. I think the whole culture there was sort of. I've always seen it, you know, is that SEC is always sort of when it's small fry, a little firm, they're really ferocious. They're tough. They bully them and they always beat them down. If you're a small firm and the SEC comes at you, you're almost going to go out of business automatically. But they're like any other bully. When it comes to someone their own size, they've never really stood up to them.
Or bigger in some cases,
right.
as or someone as experienced as
right.
Bernie Madoff in dealing with this. Ice cream at a Dairy Queen, usually not that hard to find, but Bernie Madoff's scheme, apparently, Jim, was. What needs to be done as a result of that? Anything? Changes, structural changes in the SEC? We're talking about letting people go at a time when people are familiar with the agency or have worked there over the years say, you know what, we actually need is more people or better trained people. What do you think?
I mean, I think this is clearly a colossal failure. You're going to see new staffing, turnover in staff, new people brought in, and clearly a budget that needs to increase for the SEC. But, you know, Enforcement Director Kazami made a comment about no one should defend or make excuses for the SEC, and I'm not going to take the other side of that argument. However, just maybe to take a moment for perspective, the SEC is in charge with oversight and regulating all the investment advisors, all the registered investment advisors in the United States.
Right.
Investors, fund-to-funds, institutions are, I guess, geared to find the best-in-class investment managers. And just from a perspective of how many of those persons failed to capture this or failed to recognize for how many decades the extent of this Ponzi scheme. So, again, the SEC's job was to find it. They were given many clues or actually many heads up to look into this, and they failed to do so. But there were many investors and many highly paid institutions that also failed to detect it.
That's true. I mean, it is true. These I mean, you know, they were investing other people's money, whether they knew about it or failed to detect it or whatever the case may be. Maybe it'll come out over the years, Charles. But, I mean, how did this happen? How did that happen?
You know, greed, definitely, you know, listen, the results were so incredible and so hard to believe in, and you have to, you know, to James's point, people had to know or sense something was wrong, but as long as it wasn't, you know, listen, the SEC is watching this, or these other institutions, organizations have our back. Yeah. You know, they look the other way. I think
well, you want to believe it.
Yeah, people want to believe it, and they just look the other way. They simply look the other way.
Do you believe in the fact that we need big changes? I mean, we're talking about more staffing or more money being dedicated to the SEC. I mean, you would think that might be a result.
But I think more than the money. Listen, they were on to Madoff in several different cases. We've already seen all the different times that they were
tipped
close.
off and didn't.
They were so close, and I think the culture has to change. They say it was low-level and mid-level management that stopped some of these complaints from filtering up. I think the problem, though, was coming from upstairs down, where when your boss is in awe of the guy that you're auditing, then you're not going to really press this person too hard. And I think Bernie Madoff himself made the comment that you know, these guys work at the SEC for 5 years and then go to become compliance managers at these very hedge funds that they're overseeing. I don't know how you change that from being a farm system of sorts, but
that's the kind of inherent conflict of interest, and Jim will make that the last point. I mean, is there any way to change that? Because that's true. There's a lot of former SEC officials that are now working on Wall Street, making a multiple of what they used to make in government, and people say, well, that's why they don't press these things too hard, because they want a Wall Street job when they get out. I
mean, I think, unfortunately, there needs to be a rift and actually a divide between the regulators and the investment managers. And it's almost the cop and the assumed investment managers, regrettably, I think, are supposed to be assumed guilty until proven innocent. And I think the SEC clearly did not operate under that manner. And given the level of employees and the sophistication of employees they sent in, it just wasn't possible.
All right, guys. Thank you, Jim and Charles. Appreciate that. Now back to squawk about the markets and the trading day ahead. Ashley, of course, with me in London, and the two of us are joined by Fox Business contributor Charles Payne, James Frischling, NewOak Capital, both here in New York. Ashley, why don't we start with you? I mean, we've been up 5 days in a row here. It's been a nice streak for the U.S. markets, but you guys have been even doing better than that. We always wonder when this is going to end, but the streak keeps going, huh?
Yeah, and eventually, as we were talking about with Andy Lynch at Schroeder this morning, eventually the economic data will indeed catch up to the sentiment, and the sentiment will actually be based on something. Today we're seeing those good numbers out of China, the economic data, the industrial production up again in August, bank lending also, all showing some very strong signs for the Chinese economy that so many people seem to be focused on as helping to get the global economy out of this recession. And that sentiment really coming over into Europe. And, of course, the other thing is risk appetite coming back and how weak the dollar has become, really dropping, which is another sign of perhaps the markets feeling a little more confident about things.
All right, one more note on Europe before we go to Jim. Nick Hastings is with us. Nick Hastings is with us, the London Stock Exchange. What would you add there, Nick, to what Ashley's talking about? Because it has been quite a run for the markets last few months, really, but especially the last week or so.
Absolutely, but one can't help thinking things are getting ahead of themselves. And if you look at the Chinese data, I think, yep, industrial production, retail sales, Chinese lending, all excellent, above expectations. But you've got to look at those Chinese trade figures. The exports have fallen 23.4% over the last year. Add that into Japan and Germany, who've been showing similar weak exports. The suggestion here is global demand is not recovering the way the markets seem to be anticipating. So maybe that global recovery that we all think is here is not so secure after all. I think that's going to be key coming up soon. Okay, fair point from Nick. Let me go to you on that, Jim. Then the Japanese GDP also was not revised, was revised a little bit lower than it had been. So maybe we are. Are we ahead of ourselves here in the markets or no? I'm in the camp that we are ahead of ourselves. And I think for me, it's based primarily on the consumer and based on the unemployment rate, which continues to increase. Yep. And actually, that's the stated numbers versus the unstated numbers, which I think are considerably higher. But it is difficult for me to talk about stocks and look good sitting next to Charles Payne. It might even be difficult for me to look good at all sitting next to Charles. But at NewOak, we focus a lot on distressed opportunities. The fixed income space. Are you guys seeing a lot of opportunities there? And in that case, we are, particularly in the bonds that are backed by mortgage products. Residential and commercial, where the underlying delinquencies and defaults are not being reflected in the prices. In fact, that means that absolute Armageddon was priced in, and correct. It's not as bad as that. And that's exactly right. We think we think bonds are being discounted and sold at levels that are not being reflected in the underlying data. In which case, one has to be very careful. But we do think there are opportunities in that space. All right. So you're seeing opportunities there. Back to stocks with Charles. What do you think? Because it has been a run. We've been thinking, as Nick said, that we're ahead of ourselves for a while, and it keeps going up. We're ahead of ourselves, and I love it. You want to stay ahead, right? Listen, we're ahead of ourselves. There's no doubt about it. You look at the last couple of weeks, what was driving, AIG and making explosive moves, Freddie Mac, Fannie Mae. At least now I'm starting to see, money shift out of those into better quality stocks. So that means that investors probably feel like, okay, I want to participate, but not as crazily, or, is that a word, as I was before? Now. Right. Yeah. No, I know what you mean, Charles. So we'll see whether it keeps going. All right, we're going to wrap things up this morning. Thanks to all you guys. Nick, good to see you, and London, Ashley, and Jim as well. And, of course, it's September 11th, so as we wrap up, by the way, Charles.